video today. I'm working on a Saturday, which isn't typical for me. I don't normally work my day job on a Saturday, but I had a schedule change, so here I am doing the lunchtime video on my weekend. And today I thought I would talk about how it is that an economic failure is actually going to end up being a blessing, not only to the Federal Reserve, but to everybody else out there when it comes to interest rates coming down to relieve the pressure on society and on the economy. Something that is very obscure for me to understand, because most people look at the Federal Reserve as creating pain and suffering by keeping interest rates elevated. It's just like it's harder to get into a house, it's harder to, buy groceries, it's harder to do everything out there, and it's all the Fed's fault because the interest rates are elevated. Now, I have to think, what would be going on within the economy that would then give the Fed the idea that they would need to lower interest rates? And ultimately, it would have to be bad economic times taking place, dramatic slowdown in business activity, major rise in unemployment. Things taking place that would typically have people going, man, this is a bad economy, would then have the Federal Reserve lowering interest rates, which people would find to be a good thing. You see how backwards this is? So a failing economy is somehow a blessing to the people? Like, I have such a hard time trying to wrap my head around how this is supposed to work. Like, I don't look at the Federal Reserve as an evil organization. Granted, they're not there for my benefit, but then again, I also don't look at them there to try and deteriorate my life either, right? They're just another way that the economy is operating, considering the time in history that we are in. Now, we can push blame all over the place and talk about better ways of operating, or why this one is so terrible, but it doesn't matter. This is the situation we're in, and we have to figure out how it is that we conduct ourselves in accordance to this particular situation that we happen to be in. So let's think about this. What is it that the Federal Reserve is trying to do? Because I saw a video the other day, and I don't want to name the individual because I know him. Like, I know him well. He was on Fox News, and a buddy of mine, actually, Old Nighter, sent me a link to the video. And so I guess Old Nighter will know who I'm talking about, and many other people will probably kind of relate to the idea behind it. And the argument behind this idea is that the Federal Reserve is political because the individual people within the FOMC, the Federal Open Market Committee, are political within themselves, right? Each individual person has a political view. Like, I have a political view, you have a political view, that person over there has a political view, we all have them, right? And so if you are a voting member of the FOMC, you cannot help, right? You cannot prevent it from incorporating your political mindset into the monetary policy voting framework, right? So if you have monetary policy that you're voting on, your personal beliefs and the ideas that you have are going to be a part of that vote, right? And this is ultimately what a lot of people are feeling. Now, I would agree with this. I would agree with this position, except that if you were to take this idea that the FOMC is going to take a personal belief on where it is that interest rates should go, based on the idea that if they were to have interest rates more accommodating for this particular administration, it would be helping them in an election. Now, this is the other argument that goes with it, right? Now, I look at that and I say, okay, if I was to take in this narrative, this idea, this theory, that the Federal Open Market Committee, within their own individual mindsets, takes on a political belief that is more liberal than conservative, that they will then have monetary policy adjusted to try and make it more reasonable for the Democratic Party to become reelected, right? I mean, this is kind of the idea behind it. I cannot take this theory into consideration from the ideas that I have from monetary policy, because then that would actually take away from the Federal Reserve's monetary policy strategy for a low neutral interest rate world when you think about where it is that unemployment needs to be in order to create the inflation or deflationary scenario within the economy itself. Now, Knowing what I know about the Federal Reserve and what it is that they are looking for as far as inflation goes, they are not going for a 2% target, which a lot of people, like 99% of the people out there, believe that the Federal Reserve is going for is this 2% target that doesn't exist. Appropriate monetary policy right now is to have monetary policy, or to have inflation, how do they put it, moderately above 2% for some time. Okay, so now we have to think about this. If the Federal Reserve is trying to have inflation that is moderately above 2% for some time, but that's not what is communicated out there to the mainstream media, this is the monetary policy that is now not necessarily secret, but not communicated to the public. We can find the evidence of this monetary policy within their own speeches. There is two communications that are now happening here. And this is why I don't believe the whole political mindset behind it, because the Federal Reserve is actually looking for inflation. They're not looking to bring inflation down, right? They're looking to have inflation moderately above 2% for some time, meaning continuing into the future. So when most people are believing that the Federal Reserve is attempting to try and get inflation down to the 2% target, they are wrong. It is an incorrect way of thinking. That is not the Federal Reserve's policy. That is not their monetary strategy. That is not what they are going for. And so in order to have the inflationary scenario that the Federal Reserve is looking for, it has to be exactly where it is today, with a higher inflation expectation going into the future. They don't want to change that. And as much as people want to believe that they are political, trying to make the environment a little bit more accommodating to the Democratic Republic or to the Democratic Party, that's not correct. That doesn't have anything to do with anything within their monetary strategy that they have communicated to themselves within their own speeches to the other bankers out there. That's not part of their communications. Right? So this is where I really I focus in on this stuff, and it's very complicated, and it is very obscured, and it's difficult to try and isolate the exact statement coming from the Federal Reserve to prove the point. You have to listen to them in their communications over time, over the different speeches, over the different timelines that they give. Like, if you think about it, if they were truly trying to bring inflation down, right? If it was truly like an inflationary scenario that they were looking to try and bring into alignment with the 2% target, if this was truly the case of it, right, then they would not be saying over time, right? Just take that into consideration. They would be saying once we hit the 2% target, but they always include over time. We want to make sure that we have achieved our goal, right? See, this is really where it's very confusing to most people. And when they look at the Federal Reserve and what it is that they're attempting to do, most people just don't get it. They want the inflation expectations to remain elevated. They need that to raise the neutral interest rate, to get their monetary policy back into a reasonable position in which that they can use the adjustment of the Fed funds rate again as their main tool to stimulate the economy. All right, man, I just really kind of went off there. How many people we got watching? We got 183 people watching with 25 likes. Hey, Johnny. All right. Thank you. Hi, all. Thanks, Mr. Horology. All right. I bet they lower, but less than 25 basis points. It will still be seen as a positive and shouldn't scare off bond buyers. Yeah, and that's really what it's going to come down to, is just being adjustments of the Fed funds rate at this point would not do anything for the economy by the end of the year. Right? See, this is where I think a lot of people are misunderstanding what it is that the Fed funds rates even does. Like, once the Federal Reserve adjusts interest rates, it takes anywhere from 6 months to a year before that really starts to impact the economy. Even longer than that, up to 18 months. Right? So even if the Federal Reserve was to lower interest rates right now, we still have 6 months to a year before we would truly feel the impacts of that onto the economy itself. Right? After the election, it's already gone. Like, the opportunity has already passed. right? Now, the perception that the markets will have from a lower interest rates will be different, but the actual impact to the economy will take a lag time, which is not going to benefit the Democratic Party in this election year. It just won't happen. Like, no matter what they do, even if they were to lower interest rates right now, it still wouldn't do it. Like, the idea behind it would, but the actual impact to the economy wouldn't take place until, sometime in 2025. All right, moving on. Let's cruise down here to the bottom. Colin. Oh, hey, sorry, man. Let's get some dice up there. All right. All right. The velocity has tapered, but still strongly uptrend. Yes, and it needs to still increase. Aloha from Hawaii. Hey, financial firefighter. Right on, man. It's great to see you. Inflation helps my student loans. I don't see the stag or the flation. Jerome Powell. If they really, I wouldn't listen to anything that is communicated on a corporate media when it comes to the Federal Reserve, unless you want to see the monetary policy in action. Okay? If you want to understand the monetary policy, you have to go to the speeches. If you want to see the monetary policy in action, you go to the corporate media. And you listen to the Federal Reserve and, their, whatever governor or banker or president or whatever it is that they're interviewing at the time. But all that corporate media stuff, that's them communicating the monetary policy in an effective way, right? The communication of the monetary policy for its strategy and how it's going to work and everything else is very different from the communications from the corporate media. This is something that I've been trying to, in fact, I left a link down in the description for you guys to, I'm pretty sure I did anyway, to a video I did a couple of months ago calling out Time Magazine for actually spreading propaganda. And in that link, or in the video link, if you go to the description of that video that I post, down there is an ungodly amount. I think I probably put, I don't know, a half a dozen links to all these different Federal Reserve sites explaining my theory and my understanding of monetary policy. And, really, when you go and you read all those different documents, you can see that their communication within themselves is so different, right? But the propaganda that is now being spread through the corporate media was so prevalent. It was so obvious to me. And I was just like, man, why are they doing this? Why are they just spreading this misinformation, like this horrible stuff? And then I realized that's the monetary policy within itself, right? They're spreading that information on purpose, misguiding the people out there on purpose so that they can have the elevated inflation expectation and people believing that they're actually attempting to go for a 2% target. Without that elevated inflation expectation and the people believing that they are going for a 2% target, without that being communicated as well as they did, their whole strategy wouldn't have worked. And that's what's really incredible to understand, is that once you see it clearly, it is just like, oh, wow, man, they really pulled it off. Like, they were able to pull it off. Everybody missed it. Like, literally, like, one dude sitting in a 99 Ford Explorer was able to call him out. We're just say, I figured it out, man. I cracked the code on it. And I'm not trying to be bragging of it or anything, because the documents are right there. I mean, it's like, it's not even me. It's just like, you can see it right there. All you have to do is just read those speeches and see it for yourself, right? But however, what they communicate within those speeches and what they communicate out there on the corporate media are not the same thing, right? So having like the idea that inflation is going to be running into the future, is going to be running heavy, that they were about ready to run into recession or economic collapse, or else all this other stuff, what it does is it puts the perception into the people that there is going to be hard times coming into the future, that inflation is going to be running elevated, and that starts pulling the neutral interest rate up, which is what the Federal Reserve was attempting to do. And they talked about that back in 2018, even before that, right? What do you want? I don't think I have any here. You want some seeds? There you go. Besides Cantillon, what are 3 major theories we should deep dive search into? Thanks. Okay, Phil, great question. So there's the 3 economic theories, right? And then the 4th that I come up with, or at least that I try to give people the idea to follow. Okay, so number 1 economic theory, Cantillon's essay on economic theories, great essay, especially the chapters on increase and decrease of money to the state. So if you are looking to try and understand the economy, I think starting with that book is an excellent read. In fact, where is it here? Uh-oh. Did I take it in the house? Oh, no, I didn't. It's right there. All right. This is the book right here. Cantillon's essay on economic theory. There's a link down in the description to an Amazon affiliate link. So if you go and buy the book from Amazon, if you follow that link, I'll get a little commission off of it. Even if you don't want to buy the book, you can find that essay for free at the Mises Institute. So just type in, Cantillon essay on economic theory, right? And it should pop right up and you should be able to find the essay for free online. Now, if you do happen to click on that Amazon affiliate link, anything you put in your cart for the next 24 hours, I will also get a commission for. So if you don't want to buy the book but are looking to buy something else on Amazon, just follow that affiliate link and I'll get a little commission off of it. Now, Cantillon's essay on economic theory, those 3 chapters, increase and decrease of money to the state. The other one, Greshams Law. Greshams Law is where bad money chases out good. Right, and understanding Gresham's law is an excellent theory to take into consideration, especially when you hear people talking about a gold standard, taking over the fiat currency or Bitcoin standard or something like that. If you understand Gresham's law, you're going to understand how that's going to be a very difficult thing to happen. Triffin's dilemma. Triffin's dilemma is, how is it that the world reserve currency, if you are like the United States, the custodian of the world reserve currency, like the US dollar is, how is it that you get that dollar out there to the world? And this is a very difficult thing to try and wrap your head around when you think about being a manufacturing nation, trying to manufacture more stuff to send that stuff out there to the world, but the world is going to send you their money. And this was the problem, is that the United States was a manufacturing powerhouse, had a whole bunch of gold sent to them from the rest of the world. As we were manufacturing all that stuff, we ended up with all the gold, started increasing our standard of living, and as we started purchasing things from the rest of the world, we started sending our gold out to them, and we were going to end up depriving ourselves of all that gold if we didn't figure out what it was that we were going to do. So we started going into that world reserve currency, or issuing of the world reserve currency with the dollars. And this is the problem that we started to face, is how do you continue to provide the world with those dollars outside of going into trade deficits? And so this is exactly what we ended up experiencing, was a bunch of trade deficits. Well, you're going to sit here and just interrupt my video all day? What? Why don't you come up here? Say hi. So let's see. Triffin's dilemma, Gresham's law, Cantillon's essay on economic theory, and then the bullwhip effect. So the bullwhip effect is when there's disruptions within the supply chain and people don't understand what it is that's happening. So you have retailers who have over-ordered through the distribution network. Everybody sees these over-orders. They go to the manufacturer who says, hey, look at all these orders that we have. By the time they manufacture, get that stuff into the distribution network, they find that the retail side of things really wasn't as high demand as they had anticipated, and now all this stuff is sitting in the system, and you start seeing the collapse of manufacturers. Now, that was kind of just a brief overview of the bullwhip effect, but that's essentially how it goes down. Right now, you're seeing Tyson Foods kind of experience this with their chicken farms. Pork farmers recently experienced it. Lumber is experiencing it. They had a major bout of it over the last few years. But understanding that, and then the final one, the one that I have come up with myself, is the credible threat theory, right? And this is the forward guidance, jawboning, signaling coming from the Federal Reserve as their monetary policy, not the adjusting of interest rates, which a lot of people look at the Federal Reserve as their monetary policy. That's not it anymore. It's the talking about the adjustment of interest rates that is the monetary policy. And we can see that almost plain as day right now, just running rampant through the mainstream media. Think about it. The Federal Reserve hasn't done anything. Like, they haven't done anything for months and months and months. They have done the exact same thing as they have done the previous weeks and months as they have for a while now. Like, they're literally sitting on their hands doing nothing different, right? And yet everybody has like these ideas of what it is that the Federal Reserve is going to do, and they're adjusting their strategies in accordance to that, even though the Fed isn't doing anything, right? Now, even the balance sheet adjustment, right? Because they're the unwinding of the balance sheet, they're reducing the amount of treasuries that are actually going to roll off the balance sheet, right? So they're holding on to a little bit more of them. It is less restrictive, but it's still a restrictive position to be in, and they still haven't started doing that anyway. That happens in June, right? So nothing. The Fed has done nothing yet at all for months. But yet all these people out there have all this belief and make all these strategy changes and all kinds of stuff for the last, few months, but nothing's changed, So anyway, so those 4 economic theories: Gresham's Law, Cantillon's effect, Triffin's dilemma, the bullwhip effect, and then the credible threat theory. All right, Mises, thank you very much, All-Nighter, for posting that. I appreciate you, man. All right. I just ordered the book through your link. Thank you. Yeah, thank you very much, man. I really appreciate it. What is the blessing in short? Chop, chop. The blessing is that if there's economic chaos, then you get lower interest rates. The lower interest rates is what the market or the people out there seem to believe is going to be good for them, considering right now the Federal Reserve is creating all this pain and suffering on them by keeping the interest rates elevated. See, I love how people just blame the Federal Reserve for all their problems, right? And, to me, I look at it, it was just like, it ain't a problem. It's just the way it is. It's like the weather. Is it good or bad weather? It's not a problem. It's just the way it is. And so, like, I don't expect the Federal Reserve to do anything that's going to make my life any better than what it is right now, right? I have to make all those decisions for myself, and I intend on doing that as I understand what it is that the Federal Reserve is truly trying to do. And by understanding their monetary policy from these 2 fashions, like literally the communications through their speeches and documents that they communicate to themselves, and then the mainstream media propaganda bullshit that they put out there is just like incredible. It's just like, it just blows me away. It's just like, it's so obvious once you see it. But most people don't get the information directly from the Federal Reserve. They get it from somebody else. And that person is probably not getting it from the Federal Reserve, but making complete assumptions about what is happening based off of the information that they got from other people who didn't get it from the Federal Reserve either. Right? Like, I wonder how many times of like that game of telephone, where you whisper into somebody's ear a message, and you whisper it, you keep going all the way around the room, and then by the time you get to the other end of the line of people who are whispering this message to each other, the message isn't the same one that had started, right? Because everybody's communication of it has like changed it a little bit. This is exactly what's happening within the Federal Reserve. People are just regurgitating a bunch of crap that doesn't make any sense, and they all believe each other. It sucks. It's like, well, it doesn't suck for me because I see it, right? And I can see it just as plain as day. But it does suck for those people out there who are looking at some of this information, taking it from like the mainstream media. You got the big time, big name economists out there who are literally spitting out things that just are a complete delusion. Like, they believe it. I believe they believe the stuff. But when I hear what they have to say, and I'm like, are you not understanding that the Federal Reserve is going for a 2% average inflation rate over time? Do you want to consider that into the strategy? No, not at all. Never even heard of that. Just, it's surprising. All right, what time is it? All righty, guys. I got about another 4 or 5 minutes here. All right. Smoke that like Cheech and Chong. Smoke the thumbs up like Cheech and Chong. Yes, please do. Hey, we got Dishes up in here. Right on, Dishes. Thank you for being here. All right. Excited? Okay. Are you writing your own book on this stuff, or have you already written one? If so, I'll buy one. Thanks. No, I'm in the process of doing that now. I'm getting the course piece together. This is difficult for me. Like, I've never done a course. I've never taken a course. I've never really read any books, all that stuff that people were like, hey man, you should try, like, I don't have any experience with any of that stuff, so I'm like just trying to wing it out there. Like even doing these videos, like I'm no economist, I didn't go to school, I didn't get a degree on any of this stuff. Everything that I've learned, I've had to piece together from studying the Federal Reserve and listening to other economists out there and trying to just piece together all these different little ideas that, you know, make up the economy. Most people don't do it the way I did it. Like most people start with the base, like they went to school, they learned economics from some professor out there, and then they start building it up from there. And when they do that, it's very difficult to change or to restructure a belief system that's based on this, right? Because everything that they have learned comes from this single foundation. I didn't do it that way. So that's why I'm like all over the place when it comes to my ideas. I mean, I've had people accuse me of being a Keynesian economist, and I'm like, how is that? I don't even know what that would mean. Like being a Keynesian, I understand what Keynesian economics is, but I don't understand how I would be a Keynesian economics or economist, because I don't make suggestions on the way the economy should operate. Like I just look at it the way it is, and some aspects of it very much have free market kind of styles to it. Others are very controlled and very Keynesian like. And being able to recognize the difference between them is really where I feel is going to be able to position myself to be most appropriate. Like that's the way I look at it. Like understanding what it is and not thinking about the way it should be or could be or why it's bad or why it's good and none of that stuff. You just operate the way it is, you know. All right, moving on. I'm going to give it 4 more minutes here, guys. All right, hey, UE, thoughts on trucking industry? Pretty bad for a lot of owner-operators now. A big majority of them are knee-deep in overpriced trucks from 2022. The malinvestment, that's right. You know, and we're going to see more issues taking place all over the country with things like that. Not just, excuse me, not just in trucking, but you're going to see it in all kinds of industries that overindulged in the idea of production during a time of shortages and high prices. Like that's it in a nutshell right there. All these people, think about it, when truckers were in super high demand and they were paying like truckers $15,000, you know, or $20,000 a month or something like that to operate a truck because they couldn't find anybody to operate them. They were looking to hire the National Guard to get the stuff away from the ports faster. This was like a prime environment for malinvestment to take place. People see that, they're like, whoa, look at how much the demand for trucking is. I'm going to pour a bunch of money into investing into trucks so that I could take advantage of these high prices. All these people start to pour their investment into the facility, to the equipment, to the drivers, to everything that happens to transport stuff, and then realize that everybody else had done the same thing. The demand for trucking drops significantly, and all this high debted equipment and everything that's now in the industry is going to start failing, right? And this is what we're experiencing right now within the trucking industry. You're going to find other industries suffering through it too. I mean, lumber's going through it. I mean, we just talked about Canfor shutting down up in the British Columbia. I'm trying to remember the area, but I can't remember what the name of the town is or the name of the mill. But you know, lumber's doing it right now. Lumber prices are really low. The overproduction that had taken place, or the high demand for lumber that created the investment going into lumber production during the pandemic when lumber was at $1,700 per thousand, is now resulting in the pain and suffering of these mills with low lumber prices and overproduction that's happening. I mean, it's just like, it's nobody to blame. Like, you can blame politics. You can totally blame the administration saying, oh, what about all the tariffs and stuff, like, you know, there's all kinds of things that you can put out there. Okay, I mean, that's a good excuse, right? There's good reasoning inside of that, but it's not the real reason, right? The real reason is the malinvestment that went into it due to the high prices, and now the overproduction is shutting them down, right? And you can say this about a lot of different industries. It doesn't, I mean, you can inject lumber, chicken, pork, whatever you want, semiconductors, you know, it doesn't matter. You can put whatever you want inside of this, and it's going to be the same story, you know? All right, thank you so much for the $2 there, Angry Capitalist, man. I really appreciate your support, brother. All right, UE practitioners such as you are better than PhDs. Well, thank you so much, man. Well, here's the thing, like when you self-educate, you don't have limitations. Like people were like told me, dude, you really think outside the box, you know? And I'm like, there's a box? Like I didn't know that was a box. I didn't know there was one. I didn't realize that. I didn't. I'm sorry. Did I cross the boundary? You know, like I didn't know there was like they said you broke the boundaries. You know, I'm like what boundaries? Like I didn't know there was one. You know, where's the line? Where's the box? I don't understand what these people are talking about. How it is that I was able to do this, and I'm like, well, do what? You know, like I don't get that. What are you talking about? But then I realized, man, I do understand a hell of a lot more than most people ever could. Even a lot of the economists out there, I have elevated my understanding beyond what it is that they have. And I don't even understand how it is that I even got there. Like they understand a whole lot of in the way of how stocks and companies and corporations and all this other stuff, how they work and operate and how to do investments and fundings and stuff like that. Like, okay, cool. Like people understand that a hell of a lot better than I do for sure, and I'm not going to try and argue that one. But when it comes to economic theories and way it is that the human nature actually interacts with other people and creates the economy in which we know, I think I got a better grasp on that than most people ever will. All right. And I don't understand how it is that I was able to do this, except I just kept asking the damn questions. What is? What is? What is? What is this, man? When, I'm reading a Federal Reserve document and they're talking about something I just don't have any clue, I would read it over again and look for the definitions and go and read the footnotes until I finally got a hold of what it was that they were talking about. Next thing you know, I'm understanding what the neutral interest rate being close to the lower bound of zero, with the Fed funds rate being next to zero, and how it is that the Federal Reserve was going to conduct monetary policy considering that there was no more ammo left. Like monetary policy, as everybody had traditionally understood it, had come to an end, right? No more. Done. But yet here we are. People are still talking about the Federal Reserve and the adjustment of interest rates. They did it. Like it's amazing. And how it is that they were able to pull it off, you really have to understand it from years ago, all the way back to Ben Bernanke's speech from 2002, even prior to that, right? But understanding it from 20 plus years ago and how it is that they have stepped themselves right into this position of where we are today, and them using the forward guidance, the signaling, the jawboning, the corporate media to conduct their monetary policy, and how that works is such a hard thing for somebody to try and wrap their head around, especially if they already have their beliefs of what it is that's happening within the economy, right? And that's the problem that most people face, is that they're sitting on that side of things. They already have their pre-loaded understanding beliefs of how the economy is working, and they're not learning what it is that monetary policy is doing from the Federal Reserve itself. They're basing it off of this understanding of history and their old college professors and everything else that told them how the Fed works, and now they're sitting over here completely confused about why it is that the Federal Reserve is not able to get the inflation down to the 2% target. Not realizing that they're not going for a target, and that the Federal Reserve doesn't even care about a target. There is no target, right? It's a 2% average inflation rate over time, and nobody sees it. Nobody. Alrighty, guys, thank you for hanging out and listening to me rant off there a little bit. I really appreciate you guys. Alright. Here we go. UE, do you see common method to exploit the bullwhip effect either as a competitor or new entrant? It's very prevalent in the protein segment. What I would do, I mean, if you were really looking to take advantage of the situation, you wait till everybody says, man, it is the worst possible thing that you could possibly get into right now. That's when you get in. Like when everybody was saying, man, owning a lumber mill is absolutely horrible. Nobody can make any money. I'm completely in debt. I'm going to suffer in pain. That's the time that you start looking at lumber mills to buy. Completely counterintuitive to what you would think, but you buy when there's blood in the streets. You buy when there's pain and suffering, right? You buy when there's travesty, when there's horrible times. That's when you want to buy, right? So that's what I would look for, is these industries that are suffering in a complete chaos due to the overproduction that had taken place. I mean, if you can buy into companies that are still functioning at the absolute low, or you can start a business when they're at absolute low, then you only have good times to come from that. So, you know, it's hard to see it like that, you know? Like right now, I'm looking at like, you know, like the things, like look at some of the things that are coming out of China right now with their overproduction, like the overproduction of batteries and solar panels and stuff like that. Like there's going to come a time when those companies are going to crash. They're not going to do well. And during that downtime, there's going to be companies out there that are going to survive that. But the stock price, the investment capabilities of getting into it are going to be quite extreme. Like you're going to have all this opportunity to do it, but nobody's going to do it because the industry is going to be in shambles, right? How do you see which companies are going to be the right ones? Couldn't tell you, man. That's your job. Like you let me know when you figure that one out, right? All right, man. I love you guys. I really want to hang out here more, but I got to go back into work because it's Saturday and I'm working Saturday. So good times. Uneducated Economist, you let me know.